Alrighty guys, another day is in the books. It is Thursday, May 12th. Do a quick recap here, show you a couple of bullish setups, believe it or not. But I'll tell you what, the S&Ps, the Qs, not a bad finish today, considering at one point they were down about 2%. So if we look at the cash settled index, the SPX finishes today down about 0.1%, and the QQQ, those Q-tips, finish a day down about 0.25%. So not a bad finish, and the big question continues to be, at any point soon here, are we going to get a decent bounce, a decent short squeeze that I would like to short into? That is the big question, guys. We're obviously deeply oversold. If you look at the put-call ratio, this did get to kind of the high of the year, this $1 and change level, where that kind of tapped out back in January and February. So we're deeply oversold. That's not new. Folks have been getting heavily short. That's not new. Doesn't mean we have to bounce. But if we do get the short squeeze, I want to short the snots out of it. But enough about the short side. Even in a crappy market, crappy meaning the overall structure overwhelmingly is bearish, even in a bearish market, there's still a few good-looking trends to the upside. So we'll take a look at a few of those guys, one of them being UNG, which is natural gas. So we bought some calls in the options room last week on that dip, and we actually took a position here today in the mastery. So looking at UNG, we have a good trend. We've got buy signals on the daily chart. We've got buy signals on the 4-hour chart, all the way down to the 30-minute chart, where you got a nice squeeze setting up. So we're taking our position here. We're looking for a push towards $30. The exit to the downside is going to be on a close under that daily 21 EMA. One or two closes under that daily 21. Maybe in 2020's market, maybe in 2021's market, I'd give it a little bit more room. But we've seen too many examples as of late of good-looking structure just like this, totally shit in the bed. One good example is U.S. Steel. Another good example is the materials sector, the consumer staples sector. The list goes on and on. Like healthcare. Healthcare looked pretty good. Then that kind of craps the bed. So while I do like UNG and I got my buy signals on a 3-day chart down to a 15-minute chart, we're going to manage that risk nice and tight. So there's one option for you guys. Something to potentially add to your watch list. Then another name here is actually going to be Kellogg's. So being that the big tech names are getting hammered, the semiconductors, all the sexy stuff, any good-looking trend is going to be off the beaten path right now. So, not the sexiest name in Wall Street, but I do think Kellogg's here, old Frosted Flakes, might be worth a dip on the buy. We've got daily buy signals. We got buy signals basically all the way down to the 30-minute time frame. If you look at this 1-hour squeeze here, that could trigger the next move towards 75.76. So Kellogg's looks pretty good, and then to continue the theme of some oddball names here, if you look at Kraft Heinz, I know, sexy. But looking at Kraft here, guys, good trend, good structure. We've got active buy signals on the daily chart. 4-hour squeeze. 2-hour squeeze. And a 1-hour squeeze. The only thing I would like to see here is that the 1-hour chart and the 2-hour chart start to become a mirror image of the structure we had back here. Good looking daily chart, good structure, but I want to make sure my foundation is rock solid. What we're looking for on this kind of trade is a push just like this. What I'm starting to learn, the foundation really matters. We're not in a market right now where the overall environment is going to carry you into the promised land. If we're getting long, we want to make sure everything is intact and that structure is firing on all cylinders. So, if you look back at that most recent solid push here for Kraft, you had buy signals on the 4-hour chart throughout the entire duration. The fact that we don't have them right now doesn't mean it's going to roll over, but it is something I got to pay attention to. And I am going to wait until we get a buy signal here on the 4-hour chart before taking any action. So UNG looks pretty good. Kraft looks pretty good. Kellogg's looks pretty good. And then General Mills. Pretty much along the same lines here. We got the daily buy signals. Take a quick look here at the 4-hour chart. Beautiful 4-hour squeeze. Printing the buy signal. So gotta like that. We got a 2-hour squeeze with the buy signal. We got a 1-hour squeeze with the good stuff. So there you have it, guys. Good trend, good structure. Up to this point, I'd say each of these, General Mills, Kraft, Kellogg's, and in UNG, they've done a really good job of bucking the overall trend of the market. I don't think you want to fall asleep behind the wheel and blindly buy calls on any of these because the market continues to get ugly. In big picture thinking, I think it does. But in the short term, the next week or so, if there's no decent bounce in the market, we could get into that margin call Monday, just total liquidation type of market. The UNGs, the Crafts, etc., they are liable to start breaking down as well. One more chart, guys, I want to show you, only because we've covered this like ad nauseum for the last handful of months here on the channel, is energy. So here's the interesting thing about energy. Again, what are we looking for? If we're going to buy calls, if we're going to sell put credit spreads, what are we looking for? We're looking for something in motion. Right? We're looking to buy it during that little break in the action, but bigger picture-wise, we're looking for something in play. Looking for something moving and a grooving. So that's what you're looking for. Follow through, good momentum. Every dip to the 21 EMA gets bought. So if we go to a 4-hour chart, you're going to notice every single day, since the beginning of this move back here in early January, we've had buy signals on the 4-hour chart. Until recently. Doesn't mean energy's a short. Doesn't mean it falls apart. It just means that right now the foundation, it could be a little bit better. I don't got a 4-hour buy signal, but during the meat of the move, they're all over the place. Right now we don't have an hourly buy signal, but during the meat of that move, they are all over the place. The same thing goes for something like a ExxonMobil. Good trend, good structure, but how can I differentiate between a daily squeeze that's going to fire to the upside, giving me that good stuff, versus a daily squeeze that might roll over in my face? You find good trend, you find good daily structure, and then using these buy signals, you can get that timing down with your good foundation, where your 4-hour chart down to a 30-minute is coiled up, everything's lining up for a beautiful push. And right now, ExxonMobil does not have the 4-hour buy signals. So that, guys, I think, is a reason to, if anything, be a little bit patient here. On these energy ideas, it's kind of similar to U.S. Steel. Right? Good trend, good structure, pulls back to the daily 21. Good-looking daily squeeze completely falls apart. So when you're buying that daily squeeze right there at that 21 EMA, what we're looking for is another push just like that. When we're moving in that fashion, guess what the stock has? Buy signals on the 4-hour chart, buy signals on the 2-hour chart, buy signals on the 1-hour chart, 30-minute, etc., etc. Right now, what does U.S. Steel not have? Well, we don't have buy signals, we have sell signals. More importantly, if you look at the 4-hour chart, a good 3 or 4 days before this rolled over, it stopped printing the buy signal on the 4-hour time frame. Doesn't mean I'm going to short it. Doesn't necessarily mean I'm going to exit my trade right away. It's just a heads up that my foundation might be breaking down a little bit. So I'm not to say energy is going to pull the same kind of move, but food for thought, guys. So there you have it. Big picture game plan. I want to short the S&Ps. I want to short the Qs. Give me a bounce in Tesla to short. Give me a bounce in Apple. But in the meantime, we are being patient, and we are keeping an eye on some of these bullish plays here. We got a little bit of UNG exposure. We're going to keep an eye on the rest of them. But that's about it, guys. We got our UNG position. In the mastery today, we did put on a starter position with a short on McDonald's. McDonald's has got bearish squeezes with sell signals on the daily all the way down to the ground. So we're looking for a flush down to about 235, 230. We will look to close it on a couple closes back above that daily 21. So we've got a short, we've got a long, and then we've got an unbalanced put fly on the SPX that would benefit from a decent bounce here into next week. We got our center strike at 3,900, so ultimately we're going to get our full credit if we hold above 3,900. A nice rip to about 41, 4,200 would make our lives a little bit easier. But I hope you guys found this helpful. As always, I appreciate each and every one of you subscribing and checking out the videos. I always appreciate the comments. And until next time, guys, enjoy your night. Enjoy some NBA playoffs if you're into that kind of thing. And I'll talk to you in the next video. Adios.